I've done my best for you, doing best through this trails of love.
Okay, now we come to questions number 3. Now if you look at this question, same thing, we need to do adjustment. So if we look at here, they say closing stock, okay, closing finished good are valued at 180. Okay, while the work in progress is 140. So this means that your closing stock should value at 320. But then the question mentions, this does not take into account that it was discovered 10 computer, okay, console with cost 500 each has been badly damaged. So 10 computers, okay, this 10 you have to minus out because it's badly damaged, so it means that 5,000 you have to minus out. But the question mentions you have a 50 ringgit as a scrap value, so lower cost and net realizable value. Cost is 5,000, net realizable value is 50, so you can only choose this 50. So if you look at this, you use 320, okay, minus 1,000 minus 5,000 plus 500. So this is your closing stock value, 31550. Okay, so closing stock value at 315,500. This is adjustment number 1. Then you have adjustment number 2. Pattern right was acquired in 1st of January, 3-year license span. Okay, if the company choose to do so, it could sell this right without there being a significant impact on the remainder. Okay, so look at here. This pattern right, you have a 3-year span, so you need to calculate the depreciations, 440,000 divided by 3. So we have 440,000, right? So we have 440 divided by 3, 146,667. 146,667. This is depreciations per year. So your depreciations per year, this one you should go on to add to your current year depreciations. Now since it's a pattern, so we call it amortizations for pattern. So here you will have this amount, and you will have the accumulated amortizations. Okay. Now next one, depreciations are being depreciated over 30 years and computer is 5 years. So look at your building. Building is 880 and your computer is 165. So 180 divided by 30 years and your computer is divided by 5 years. Okay, 888 divided by 30 years. Every year you're going to depreciate 29,600. And computer you have 165 divided by 5 years. Every year depreciations is 33,000. So look at this, depreciations for current year. We don't have it, so we have to add on. Okay. Now look at this, they received a notice while the debtors has gone liquidations. Debtors owing 45, okay, then they decide to have a provisions. So you have a bad debt, you have to increase bad debt for 5,000. So you have to minus bad debt from your debtors account. So check your debtors account. Receivable minus this amount, 45,000. And then the question also mentions that you have provision for doubtful debts 18765. So increase in your doubtful debts expenses and credit your doubtful debts account. So if you look at this case, they don't have a provisions for doubtful debt. So we need to add on this account provisions for doubtful debt. So same amount. Now next one, provision for income tax is 120,000. So if you look at here, your income tax expenses during this year, your provisions previous year 18,000, but this year is 120,000. So 120,000 minus 18,000, you have 102,000. Now this 102,000 is current year expenses. It's an increase in provision, so that's why we call it is a current year expenses. So this one here, we have income tax for this year, and this one you have to add on 102, so that in total this becomes provision 120,000. Now during the year they make bonus issues, okay, 1 for 10 from share premium has not been reflected, means you haven't recorded. So bonus issue 1 for 10, we have to check how many share capitals they have. So if you look at here, share capital they have 500. So 1 for 10 means here you will need to use 500 divided by 10. So they are supposed to. So 15,000 shares. Now bonus shares means that you are increasing your share capital. Here this one you will increase in your share capital, but then this one will plus 50,000. And then the money is actually from your share premium, so minus from share premium. Okay. Now next one, check issue to supplier 5,000 was not recorded in the book. So now look at this, they have a check paid but not recorded in the book. So check paid means that your cash flow you have minus. You have the minus 5,000 here, and since it's paid, so minus from your creditors account. Okay, next one, you will have 35,000 received in advance. So this one will call it unearned revenue. Okay, so I have to minus your sales and add on to your unearned revenue. So here you have unearned revenue. Some of the books call it deferred income. Okay, it's the same meaning. So sales have to minus this amount. Next, product with warranty of 2 years, estimated 3% will be bought forward at a cost of 10,000. So means that now you will have a warranty expenses 10,000 and the provisions for the warranty expenses. Here we have 10,000. Okay. The last one, redeemable share dividend was yet to be provided. So redeemable share of dividend. Look at this. This is redeemable share of dividend is 5% times 100,000, so it's 5,000. So you're going to have a dividend here. Okay. Share 5,000. Since you didn't pay, so it's your accrued. Then you have a dividend payable. Okay, now we come to do the income statement. So we start from the sales. So sales is also equals to revenue. So in this case, you have the sales here. Total is 276500. After you minus off the adjustment here. Okay. Now next one, opening stock. So after you have done like this, check your opening stock. So if you see your opening stock in this case is your work in progress plus your inventory finished good. So total up these two, this is your opening stock. You should be able to get 349050. This is your opening stock. Plus current year purchases. Okay, so these two done. And your current year purchases. So look at here, this is your purchase for current year. So 18645. Now next one, check if you have any other thing. If no, then we'll go for your closing stock. Now closing stock, just now we have calculated, right? Your closing stock should be 331,500. Okay, so here you have 31. This is your answer. Okay, so this total become your cost of goods sold. It will be 1898050. 1898050. So this is your cost of goods sold. Now, total, if you look at here, this is on this side. So total, you should have a gross profit of 866,950. So this is your gross profit. Now next we need to minus the expenses. Check your expenses is always on the debit side. Okay, so first of all you have your staff cost is 2. So staff cost. So this one done. Next you have your consultancy fees paid. Okay, so this also done. Computer is a fixed asset. Income tax expenses. So this is the one that you will have later. So also 1. So income tax expenses done. Now next one, equity, this is your equity dividend paid. So means that this is the dividend that you pay, but dividend is in your statement of changes in equity. It will not go to your income statement. You will minus from retained earnings directly later. So this is your asset. Okay. Amortizations, yeah, this one. You have to put in amortizations. Okay. Next you have the depreciations on building, yes. Okay, so these two done. Next you will have doubtful debts and bad debts. And warranty, these three is your expenses. So put in, so these three done. Unearned revenue is your liability. Irredeemable share dividends. So irredeemable share dividend is your expenses because it's from irredeemable shares. Irredeemable shares, preference share, this is actually your liability. So anything related to it, you have to minus off, and the depreciations against. Okay, so this one and this one. Now I think that's all. So your total expenses here is 1076132. Okay, so this is your total expenses. This is your gross profit. So this year you should have a loss. So total loss is 209182. So here you have a 209182. This is your net loss for the year. Now next one, we shall do the income statement. So start with fixed asset, or you say non-current asset. So you have your cost, and you have your accumulated depreciations, and you have your net book value. Okay, now start with your non-current asset. You have your patent right, listing, cost. Okay, so this one done. You have your leasehold building as well. So this one also done. Now then you have the computer. This is also a fixed asset. Okay, so this one done. Now accumulated depreciations for computer. Opening is this amount, but you have to plus current year depreciations. So the current year depreciation is 33,000. So here you have to plus 33,000. So in total, these two you should have, okay, depreciation for computer. You should have 41,250. Okay, then accumulated depreciation on building. This is opening, but for current year depreciations on building is 29,600. So here you should plus 29,600. Okay, so total depreciation will become 74,000 for building. Okay, and the last one is the amortizations on your patents here. So this is the figure on your amortizations. So you have 144,667. So this one, the net book value you have will be 293,333, and this is 814. And here computer you will have 123,150. So total 123,1083. Now next you have your current assets. So current asset, we have one inventory. So just now this one we should use the closing inventory if you still remember. So this one we have 315,500. Okay, next you will have your bank account. Let's do this. So your bank account amount will be 680. Okay. Next, trade receivables. So your trade receivables is after you minus all this, and you also need to minus against your provision for doubtful debt. Okay, so your trade receivables, debtors, you have 800. Okay, and then minus against your provision for doubtful debts, this amount. So you have to minus 18765. So in total you get 291,035. Okay, So this amount also done. Now, unearned revenue. Okay. Okay, now that's all for your current asset. You will have 1, 2, 8, 6, 5, 3, 4. So in total, you have 2517618. 2517618. Okay. Now then we go for your equity. Now in your equity, you have your share capital. Okay, share capital in total, this amount, share capital. In total, you have 450. Then share premium. In total, you have 50. Okay. Then besides share capital and share premium, you have retained earning. Okay, this retained earning. Now this retained earning, bear in mind you have to minus off your dividend payable. So here your dividend payable, this is for redeemable shares, but not for this. The redeemable payables is this amount that we mentioned. So if you minus off this amount, okay, now in order to get your retained earning, okay, this retained earning, you have to do some extra work. You need to use this amount. Okay, your retained earning amount 1688400. Minus the dividend paid 85,000 and minus current year losses 201 209,182, your current year losses. So this is the amount for your retained earning. So in this case, your retained earning is 1394218. Okay, that's all done for your retained earning and also done for your dividend paid. Then next, okay, we have non-current liability. Non-current liability, that means that's your loan. This one's done. This is done. And now the non-current liability will become this irredeemable preference shares. So your redeemable preference share is actually your non-current liability. So put in here 100,000. Okay, so this one's all done. No figure is missing out here, except 1, 2, 3, 4, 5. Okay. So next one we'll have our current liability. So in your current liability, first one you have your provision for tax, income tax. Total is 120. So this one done. Then you have your trade payables. Now your trade payables in total is minus 5,000. So you have 253,400. So this is also done. Then you will have these 3 provision for warranty, unearned revenue. Okay, a provision for warranty and unearned revenue, so these 2 done. And the last one, dividend payable. Okay, so dividend payable. So in total, your liability, current liability is 423,400. Okay, this is your total. Here the total 1994218. So total liability and equity is 25170. You have balance. If you check here and here, you actually already balance your account. That's all.